everyone. My name is Verity Brain. I'm Product Marketing Manager at Tungsten Network. We've got everyone joined. So before we start, I'd like to thank you for your time today. It will be 45 minutes and then approximately 15 Q&A, depending on how many questions we get. So the subject today is Know Your Counterparty, Reducing Friction in Compliance and Risk, hosted by Tungsten Network and Mastercard. And today we have Emma Mills from Mastercard. She's VP of Enterprise Partnerships, and Ruud van Hilten, who's SVP of Countries and Compliance at Tungsten Network. So before we get started, here's a few housekeeping rules. So everyone is on mute currently. This is interactive. We have full poll questions during the presentation. Please ask any questions you may have throughout the presentation in the chat window. Sorry, here's the housekeeping rule. In the chat window, and we'll follow up at the end or in an email thereafter. We'll send the slides after the presentation, so please enjoy the webinar. Here is Ruud van Hilten.
Thank you, Verity, and also from me, warm welcome to everybody, wherever you are. Good morning, good afternoon, or good evening. As Verity said, my name is Ruud van Hilten. I run country compliance and strategic business development in Tungsten. It basically means that I need to ensure that the company obtains compliance in countries and remains compliant, and also remains the largest compliant electronic invoicing provider in the world. I'm here with Emma Mills from Mastercard, and Emma will introduce herself in a second. But let's briefly talk about the title that was just introduced by Verity, Knowing Your Counterparty, with a subtitle about friction, removing friction from managing risk and compliance. And for those of you who know Tungsten, know that Tungsten has been speaking about friction actually quite often, but most often in the context of procure to pay. We know that friction in business exists on many different levels. And one of those levels, obviously, is the fallout, the waste, the loss of money and time due to having to handle manual processes. You can read the numbers for yourself. They're actually quite surprisingly large. But what is even more surprising is they seem to be on the rise. They seem to be growing. And we found this out through a survey we did amongst procure-to-pay professionals in 2017 to understand what is it that is holding you back, and what are the consequences for your business, and who is affected. And as part of that study, we have introduced a new benchmark, which we call the Tungsten Network Friction Index, and you'll hear a bit more about that later. And that friction index shows that, as I said earlier, the cost and the time spent on the output of manual processes is getting worse. Now, that may be because we are in a strong economy and companies are growing, and in a sense that'd be good. But you would expect that due to all the digitization processes, the objectives that are very clearly defined, that by now automation would have allowed us to scale better to economic growth or downturn, and allowing you to spend more time on very strategic initiatives. And if you look at strategic initiatives, one of the very fundamental basics of the procure-to-pay process is knowing who your customers and knowing who your suppliers are. That's a really good place to start. So that's what today's webinar is all about. It's about managing the risk in the supply chain, and also what happens if you don't. But before we go there, please, I will ask Emma Mills to introduce herself.
Thank you, Ruud. Hello, everybody. My name's Emma Mills, and I work in a division of Mastercard referred to as Enterprise Partnerships. And we focus on delivering new payment flows to Mastercard. So those things that may be less familiar to you than the card in your wallet. We work in specific verticals, and I am responsible for the track product in the trade area. I want to just spend a couple of minutes at the beginning, maybe just sharing a few insights with you about Mastercard that maybe you would be less familiar with. Okay, so hopefully you're all familiar with the Mastercard brand, a trusted brand, very focused on digital identity and security, but we're also a payment pioneer. So for those of you who don't know, we operate across 210 territories and we process 150 currencies. We're also responsible for running the UK faster payments network, so if you use direct debits or the ATM network here in the UK, we're responsible for processing those payments, as well as supporting payments in Sweden, Singapore, Thailand, and in the US. We're particularly interested in the business-to-business payment flow. It's a market that's about 5 times larger than that of the business-to-consumer market. And we've been spending a great deal of time and effort with Tungsten Network and others identifying where we can bring our skills and expertise to bear in that marketplace to address some of the key pain points. We're going to spend a bit of time this afternoon looking at some of those specific pain points and some case study examples of them. But just to kind of set you up for those nicely, we're looking at, as Ruth mentioned, transparency of trading relationships, understanding who your customers are and who your suppliers are and what risks they might represent to your business. Payments processing is incredibly difficult in the B2B space. We all find it incredibly easy to spend our own money in our personal lives. It's highly digital and highly frictionless. In the B2B space, it's still very analog. Still 1 in 2 trade transactions happens entirely on paper, and only 1 in 4 is digitized. If you do manage to digitize your transaction, congratulations, but you'll probably then suffer the friction of being able to reconcile that with the rest of your process and getting you to that last mile benefit of being able to pull all of those things together to create an end-to-end audit trail of purchase order through to invoice and payment seems to be the nirvana everybody is looking for.
So thank you, Emma, for that introduction. Very comprehensive. As Verity said in the beginning, in the introduction to Housekeeping Rules, we have a number of questions for you, poll questions. The first poll question is the question about how distracting the management of supplier risk and buyer risk is to you. So you can all see the question on screen now. Does the time and expense of managing buyer and supplier risks and information detract resources from strategic priorities? So basically say, is managing suppliers and buyers risk, is that a distraction to you? Your choices are very little impact, some impact, moderate impact, or large impact. You can choose one, and we'll give you some time to make your choice. Please do answer because it makes the webinar so much more interactive. Okay, thank you very much for your answers. Unfortunately, we're not going to be able to show you the outcome, but we can share with you those outcomes later if you wish. But what we see in the outcome of poll 1 is that many of you choose that it has some impact or a moderate impact and also a large impact. We see very few people saying it has very little impact, even though we see some there. So there's a good spread across all options, but the concentration seems to be moderate impact and large impact. So Emma, from your experience, does that make sense? Is that in agreement with what you see in the market, where people believe that managing the risk has a sizable impact on the business?
It's very consistent with what we see from dealing with our network partners and our corporate organizations that we engage with. What we're seeing is that those organizations that are managing their buyers and suppliers are doing so in a relatively manual fashion. There's no kind of automation associated with that, and that they'll tend to have lots of different places to find the information and then collate it manually. So the fact that it's creating some moderate impact to most businesses would be consistent with our experience of the market as well. Yeah,
and by the way, it's also consistent with a study we had with Forrester Research, Forrester Consulting actually, about a year ago, about the objectives and the priorities that businesses have moving forward in the foreseeable future. And if you look at those, it's actually quite striking that 2 out of 3 for buyer environments are stating that they want to have better information and immediate information about counterparties and third-party information, and they want to have far better management and risk management tools and scoring capabilities for their business. Intriguingly, if you then look at what suppliers want, those are exactly the frictions that Tungsten consistently talks about with regards to removing the friction from the procure-to-pay process. So it combined actually underlines the story and also exactly why Tungsten and Mastercard are collaborating. That actually then leads me to the second and third question. We are combining those because our first question was about so do you see it as a distraction? But then question 2 and 3 are about, so how often do you actually check on your customers and your suppliers? And could you also tell us then to which extent you have visibility of your suppliers and your customers? So poll question 2 is, how frequently do you monitor all of your suppliers and customers for sanctions, political or financial crime, and credit risk? Your options are continuously, at least once a month, at least once a quarter, or less than quarterly. And I'll give you some time to answer, and then I'll combine the outcome of this poll question with the next one with poll question for your answers. Again, like in question 1, every option has been chosen. However, we see concentration at least once a month and once a quarter. Fortunately, hardly anybody says less than quarterly, which is good. Not so good is that we hardly see anybody saying continuously, which probably is what we expected. But then let me ask you the next question. So this was about frequency. The next question is about visibility and coverage. So what percentage of your buyer or suppliers do you currently have visibility into? Is that 100%? Can you see everybody? Is that between 75 and 100%? Is it between 25% and 75%, or is it less than 25%? And again, I'll give you some time to reflect on that and answer the question. Okay, thank you very much. Again, a good spread across the options. However, concentration is around 25 and 75%. So if we combine question 2 and question 3, what we're seeing is that you tend to look at your customers or suppliers once a quarter or once a month, and you have visibility of your customers and buyers, customers and suppliers of between 25% and 75%, and that's exactly why we're here. So Emma, if you were to respond to those numbers from what we just saw from the poll questions, how would you say that relates to the Mastercard track environment and actually why we're having this webinar?
So I think the research that we conducted ourselves when we were developing the track proposition was really consistent with how Mastercard also operates as a corporate organisation, that most large organisations focus their efforts on their largest value supplying relationships. So about 80% of spend happens with 20% of suppliers. Then where we see actually a lot of very good due diligence goes on with those organisations, they tend to be the larger types of organisations. So for us, be it the likes of Microsoft and Oracle and others that are publicly listed, the information is very easily available on them, and that they're highly regulated organisations, so less likely to pose a particular risk to us. What we ourselves found difficult, which is why we will be the first customer of Track, and we understand other organisations struggle with, is once you get beyond those tier 1 suppliers and you start to move into the long tail, those organisations are geographically well spread, much smaller spend, and it's much harder to find the information that's necessary on them. So what we've seen in the poll results is consistent with our own research and more or less the areas that we considered a difficulty for us as a corporate ourselves.
And that makes perfect sense, Emma. Thank you. Now, the question, of course, you just answered our 2 poll questions. And the question from that arises from that is that enough? Is it enough to look at a fairly regular interval? And is it enough to look at a subset of your customers and or suppliers. Actually, if you consider the current trade environment where lots of business is done online, cross-border business is very common between businesses, and if you look at the rate of change, let me just call out a number of numbers for you from what you see on screen here. So in any one year, and actually in 2017, there were 406,000 new businesses seeing the light in the US. So in 1 year, 406,000 new businesses. That's a big number, and actually in a way promising, because these are all new business relationships possibly, but about half of them fail by the 5th year of their existence, and 20% of them fail in year 1. That's a metric that tells you that actually you need to be aware of credit risks much quicker than you would normally think you needed to be. If you look globally, within 1 hour, 64 businesses have moved, and 360 businesses have had a suit or lien filed against them. In that same hour, 302 businesses will have changed their phone numbers or are now no longer accessible, and 183 businesses have had a change of ownership or have had a change of a CEO. So these elements all link to very specific risk factors that Emma's going to talk about in a moment. The ultimate beneficiary owner, sanctions, politically affiliated persons, all these different things come up here, and they come up with a rate of change that was previously simply unknown. So Emma, if you look at the main drivers, if you look at we just spoke about speed of change and rate of change, but if you were to sublimate these into the main drivers around managing risk and compliance, how would you call out these, I would say, these 4 main drivers for it?
Okay, so just thinking of those main drivers, we all benefit from the globalization that's happened over the last kind of 30 years. We'll sit on our couch this evening and order something from Amazon, and it will be delivered tomorrow. The magic that happens as a consumer creates a great deal of friction from a B2B trade point of view. Global trade is booming. In the last 30 years, the amount of tons shipped around the world has grown by 17 times. I'm always fascinated by how many shipping containers you can fit on one of those vessels. It's something 18,000 shipping containers fit on one of those vessels, each one of them capable of carrying 12,000 pairs of trainers, which will then make them way to probably by drone. So globalization, we're dealing with much more organizations from much further afield, in much more difficult jurisdictions to find information in. So globalization, that inability to know your counterparty in person because they're often quite far away, is definitely driving some of those trends. Supply chain disruption, because those goods are traveling a long way, knowing what's happening to them whilst they're in transit, getting them through that last mile to the store or to their home location, can pose lots of problems. Things like food quality as they are traveling, is that quality of goods being maintained through that journey? There's some famous cases last year of supply chain disruption where the change in logistics provider can actually prevent a fast food chain from being able to serve food for 2 days. So supply chain disruption, really important, affects share price and trading in quite a significant way. The next one really is data security. So it's the gift that keeps giving. It's in the news every day. Hundreds of millions of records are lost. Sensitive information such as account and pay information, password information is leaked, and it causes consumer to lose confidence in those organizations. And when we think about the business-to-business environment and the sensitivity of the information that's exchanged between a buyer and a supplier, security is of paramount importance. With Mastercard Track, we partner with Microsoft Azure, and we benefit collectively from the $1 billion a year that Microsoft invest in security and digital identity on that platform. Finally, speed of information. So, Ruud, you saw it before in terms of how quickly business information changes. Things like weather information, political changes. So we have Brexit coming up and others where changes in trading relationships and tariffs will change. So keeping abreast of that information at the pace at which it changes is also really important.
Yeah, I can see that, Emma. Thank you. Well, of course, we're not going to jump back to an earlier slide, but the earlier slide said something about how in the US onboarding a new supplier is actually, and getting the data right is actually quite expensive and actually takes a long time. So if I relate that to what you just said, I see a number of different things cropping up here about compliance and reputation. And we in Tungsten, we have taken compliance always extremely serious, and we will continue to do that. But if you ask me the question, what then is compliance? It's really about playing by the rules. We know that, but what are those rules? Those rules exist on government legislation. We in Tungsten are very aware of those things because of indirect taxation requirements that live around us. But we're looking here at completely different sets of levels of compliance. There's industry regulations. Some industries are simply much more regulated than others. And I understand this is also about whatever you do as a company in terms of policies. And very often you're being audited on these policies to the effect that you adhere to them. And there's also I would say a wide variety of functional requirements where you have to observe that you don't trade with countries that you shouldn't be trading with because they're sanctioned, but also on a very different level that you have your house in order with regards to bribery and anti-corruption, which I think, to use your terms earlier, Emma, I'm going to steal the phrase, so that a cup of coffee is not going to lead to jail time. And of course, there's the imperative in any business to understand where your credit risks are and where the sensitivity to fraud is. And so actually, the slide asks a rhetorical question. Why is it so difficult? Well, because as what we said before, countries have different rules, there's different regulations, industries are regulated differently. And each year, just in an ERP SAP, we see about 1,000 new legal and regulatory requirements cropping up just in the software for you to support you in playing by the book. So I think what would be good for the participants in the webinar is to build up a bit of an understanding of what does that mean. I'm talking about government legislation, industry regulations, I'm talking about functional requirements, but what does that mean in terms of damage? And I know you've got some really interesting war stories about those, Emma.
We have indeed. So taking the first, sanctions risks, most organisations are acutely aware of their obligations with regards to sanctions. It keeps them up at night, and so it should. We are just entering the month of March, but during January and February, there were 4 enforcement actions by OFAC that total $7 million. These fines are hugely punitive. They are not by any means the cost of doing business. They can far exceed the value of the trade that is the offending item. So a couple of examples this year were where goods were bought from middlemen countries but had emanated from sanctioned jurisdictions. So a cement aggregate that was purchased from the UAE but was actually emanating from Iran. And interestingly, components for an eyelash kit that was purchased from China, where some of the components had emanated from North Korea. So we see sanctions risk as something that everybody's acutely aware of and very keen to maintain their compliance to. Political risk, again, is a gift that keeps on giving. We saw the FCPA settle with a Russian telco today for, I think, in excess of $800 million for an anti-bribery and corruption case. Last year, we saw the Odebrecht case settle, where they admitted to bribery and corruption of in excess of $700 million. If you work for a large corporate, You will no doubt be very familiar with your anti-bribery and corruption policy, and when wishing to do even the most innocuous activities with your clients, you will find that there is quite a lot of paperwork to follow on that. So understanding political affiliation and having the appropriate risk-based policy to deal with that is very important. Financial crime, there's a very interesting story on disqualified director from last year. So if there is any impropriety of a director, they can be disqualified for anything up to 15 years. There was a case last year of a director that was disqualified for 4 years, but continued to be an active director in 2 organisations. They helpfully or unhelpfully happened to be married to a senior prosecutor in Scotland, and they were actually convicted and will spend jail time for operating as a disqualified director. Unsurprisingly, said prosecutor did file divorce proceedings right before sentencing. So not only a sad business situation, not also a great personal situation for that gentleman. And then credit risk. Last year we really saw a major impact with Carillion. Very large UK construction company, for anyone who is unfamiliar with them. They were put into involuntary liquidation owing over 1.2 billion. They had over 30,000 suppliers in the UK. And what's really shocking about this case is that actually their public credit rating and their published recommended contract value had been declining quite significantly for the 8 months prior to them going into liquidation. But what we saw in that case was that very few of those 30,000 suppliers are actually looking at their credit rating and ensuring that they were good to do business with. They effectively felt that they were too big to fail. And as a result of which we saw a very big domino rally effect in the construction industry last year, with a lot of smaller construction companies failing as a result of Carillion's downfall.
Very interesting, and I know for sure that we could spend all evening talking about rather saucy incidents out there. But going back to the poll questions we asked earlier about recency, frequency, and coverage, we know that 65% of chief procurement officers out there have very little to no visibility beyond their tier 1 suppliers, meaning that they can only look at the really big guys. Judging from your stories and judging from what we said earlier, the rate of change, the business data changing really, really rapidly, the risks out there, would you say size matters? Does it matter whether it's a small company or not?
In this instance, genuinely, size really doesn't matter. The regulator sees no differentiation between high value, high volume, either buyers or suppliers, or infrequent or frequency of relationship. All of those trading relationships are obligated with the same level of diligence that's required. So even if you have a small supplier that you trade with infrequently at small value, the same regulations apply to them.
Yeah, I thought you were going to say that. So we saw earlier that people consider monitoring risk, monitoring suppliers and buyers as a distraction. It's something that it takes them away from strategic initiative. Would you say that automation then is what needs to happen?
I think it absolutely is what needs to happen. That whole process needs to be digitized and automated. When you start to think about your requirements to have a diverse supplier group, your supply chain is likely to grow, not contract. And being able to perform that same level of due diligence that you can perform on your tier 1 suppliers all the way through your long tail is almost impossible if you're doing that with human resources. So the necessity to be able to automate that process and only deal with the exceptions that come from it is really important. What we've been developing with Mastercard Track is really the ability to gather that information in an automated fashion to create like that universal adapter so that it comes from a single platform, so that when you input that supplier data, it's connecting that to a source that completes, that then feeds out to multiple other locations and brings back those key risk indicators. But it's doing so in the background and continuously, so that you only need to deal with those items that change or may present a new risk to you.
Okay. So in terms of timing, you said earlier, or we found out earlier that companies tend to look at a subset of their suppliers and buyers. That's not what you're saying, is it? And also, they tend to do so at a regular interval, but not always. And I think what you're suggesting is something that's always on.
We are absolutely suggesting something that's always on. People tend to look at, so in the event of Carillion, people tend to look at the news once it's broken. You need to really get ahead of the news and look at things before they become real problems. So as soon as things start to change with those organisations, identify them and determine whether or not they represent a risk. So small events can have big impacts. There's lots of examples of this from last year, where very small organisations impact share prices of very large organisations because they're perhaps not operating with the same integrity as the larger organisation would expect. When we see supply chain, the example we have here on the slide is when we see supply chain disruption, we can see that that has real bottom line impact. It's affecting the value, share price and the market capitalisation of those organisations. When we looked at the fines for OFAC, and if anybody looks on the FCPA website and looks at the most hefty enforcement fines under those regulations, they are into hundreds of millions of dollars. They are really significant impacts to those businesses that fall foul of those regulations. So what we're really talking about is having something that is always on, that is always looking for those risk events, that's picking up on them as soon as they start to emerge, allowing you to get ahead of those bad news events and start to manage them and manage your exposure to them. It's about knowing those counterparties, having it sitting in the background, monitoring, notifying you at timely intervals around what's going on, and allowing you to predict where a trading relationship may represent a risk that you perhaps want to give some further consideration to.
So you've mentioned the name a number of times, Mastercard Track. I think it's time that we got a closer look into that now. Could you tell us, well, basically, could you tell us what it is, what it does? Could you name some numbers to it? And then I think people would want to see a little bit of it.
I can, and thank you, Reid, for the excellent introduction. So Mastercard Track is a business-to-business trading platform, and the item that we're talking to you about today is really the Track Trade Directory. The Trade Directory is a fully permissioned business database. It contains over 200 million companies worldwide. We're covering 176 jurisdictions.
Sorry to interrupt you there.
Yeah.
How many companies, Emma?
It's over 200 million.
Ah, okay, thank you. Sorry.
This is where size really does matter.
It does, yes.
It definitely does in this instance.
Thank you.
So we're covering 176 countries. We build our profiles based on corporate registry information, so where they're registered, and we can tell whether they're active or inactive. We then overlay firmographic information, which we'll show you some information on that in a moment. But things like directors and shareholders, corporate hierarchy, turnover, number of employees and so on, that paints a picture of the organisation that you're going to deal with. We also overlay credit scores so you can manage credit risk. And then we overlay global financial crime data, so sanctions data, political affiliations, law enforcement and financial regulator fines, so the sorts of things we were talking about with disqualified directors. And then some of the more reputational type issues with adverse news, so the sorts of things that may affect a trading relationship where there is a reflection on your business for trading with another organisation. What we do here is we effectively aggregate multiple sources to a single golden source of information. That means you don't have to go to many different data providers in different geographies to source that information. that's the headache that we have resolved with the trade directory. It allows you to come to one place and source the most predictive risk indicators for the businesses that you are trading with. Should we take a look at a couple of the screenshots? So this is just a still of the user interface. So what we're looking at here is just a view of your counterparty list. So you can load your counterparty list to track without there being any expense to doing so, and see what the complexion of your file looks like against our trade directory. And what this is showing you here is a view of how many of your records match with the trade directory and how many of them may have an indicator against our financial crime database. Somebody got a little bit carried away with the demo here with 17%. We don't typically see that level of match against the financial crime database, but what this allows you to do is see how many records may match and the nature of the issue that you may have with those counterparties, and you can then zoom in on those by actually selecting those businesses that have those issues, so you can then assess them for it. And what you can see here is just a view of the business profile, where you can see the corporate registry information to the left-hand side of the screen, which is showing you that that business is a registered entity and where it's registered to. And on the right-hand side, you can see the business information, so its credit score, its corporate hierarchy, the shareholders and directors, turnover, and tax ID. What you can see in the top right-hand corner is if there were any negative pieces of information on the financial crime data, it would highlight it there and allow you to go and view those events as well. But for anybody who is interested in seeing more of this, we do have an option for that at the end of the webinar too.
Great, thank you. Thank you very much, Emma. Looks very beautiful. Now, obviously, you would want to know, how does that work between Tungsten and Mastercard? So Mastercard and Tungsten have been collaborating for quite some time to come up with a really added value proposition to our customers. Tungsten, on the one hand, is a very disciplined network, as you probably know, where trading relationships are known up front, where ghost invoices are impossible. We've just added another layer of let's say, diligence and governance onto that with Mastercard Track. It's a value-added service, as I said before, but the good thing is we made it really easy, so you can continue to use your existing connection to Tungsten Network. You can continue to use your existing contract and your existing contact in Tungsten to access the Mastercard Track service. If you are not yet a customer of Tungsten's, then obviously there are multiple ways for you to engage with us, and we can sign you up pretty easily. And you can maintain your supplier records on Tungsten Network, and the updates that Emma was speaking about will be provided to you. And you can obviously also see the records on the Track service directly. So we made it really easy. I know there's a lot to talk about here, and that's obviously what we would love to do with you offline. And we'll give you some options to do so at the end of this presentation. So if I'm to conclude the webinar, with what you saw, what you heard today, is that we fully realize that it isn't simple. This is not trivial, but it is hugely important. You heard Emma speak about some of the direct damages incurred into hundreds of millions of dollars, euros, or whatever the currency is, and those penalties usually far outweigh the value of the trade. I think you called it the item, the thing that actually caused the penalty to occur. But there's also huge reputational damage or massive credit issues in the case of Carillion. So what the point is for today is that what was okay some time ago to have a look every now and then at supplier or customer basis, to have a look at and monitor a subset, probably the largest, the top tier of buyers and suppliers, is no longer applicable. It is no longer sufficient. As Emma says, size doesn't matter. A butterfly can cause a hurricane, and a cup of coffee can lead to jail time. Which again, Emma, I thank you for that phrase because I'm going to continue to use it. The point here is we are proposing an automated, always-on monitoring service that runs in the background, but will make you aware of things when you need to be aware. And that's the Mastercard Track Tungsten offering. Now, in case you want to be in contact with us directly, you can do so. You'll have an opportunity to ask some questions in a few minutes, but you'll have the following options to follow up from this webinar. One is you can get product information. You can ask for that and just tick a box because this is done in the form of a poll question. So this is poll question number 4 actually. How do you want us to follow up from this webinar? One is to get product information. The other one is to request a demo. As Emma was saying, there's absolutely the opportunity for you to take a closer look at Mastercard Track. We also have a beautiful video for you to look at in case you would want that. You can get access to the Tungsten Friction Index report, and we'll give you early access, the 2018 report, which we spoke about earlier, about the friction index, that benchmark, so you can benchmark yourself against that. And you'll be amongst a happy few to have that early access. Or you can speak to a Tungsten Network representative directly. You can make as many choices as you want. You don't need to make one choice. You can do as many as you want. And we, of course, encourage you to do so. There's not going to be, of course, any feedback from this poll question other than us reaching out to you in whichever way you just indicated you wanted. I want to thank you very much for your time today, and we will now open up for any questions that you might have. So, we're getting quite a number of questions here. So, Verity, you'll have to prioritize, I'm afraid.
I know.
Yeah.
I'm just scrolling vigorously through. So this one, can I share the risk information in Track with others?
I guess that's a question for Emma, isn't it?
Yeah.
Okay, yes, you can. The information that Track can be viewed in Track directly through our user interface, but you will also be able to see the same data through your Tungsten portal login as well.
Okay. What else have we got? Outside of cost reduction, why is it critical now to reduce friction with my counterparties?
Okay, I'm looking at Ruth to answer, but I'm going to answer this one. Okay. It's really important to reduce that friction because each time there is a stutter in the process, it's likely to cause some form of error. So by automating the process and reducing the friction, you can increase the speed and accuracy of doing business with your counterparty and free up some of your valuable human resources to deal with more strategic activities with you. It does tend to really help with staff morale and improvement as well, to be giving them something more interesting to do than some of those more mundane tasks that are around supplier onboarding and monitoring.
Yes, I meant to support that, of course. There's an element that we spoke about in the beginning of the webinar where we spoke about the paper-based processes. There's absolutely, on top of what Emma just explained, there is another element to the reduction of friction, which of course is to automate the procure-to-pay process and to ensure that we don't lose time, and to ensure that everybody's happy with the process, that suppliers have visibility of their invoices, where they are and when they are going to get paid. So that's absolutely another element of reduction of friction.
Okay, so another question we have, does the service incorporate any assessments around corporate social responsibility or sustainability?
That is my favourite topic, so I'm so pleased someone asked that. It is definitely something that we're very aware of at Mastercard. We have a Centre for Inclusive Growth and a very big focus on enabling the SME community as well. So for vendor diversity and sustainability, we are working with the Tungsten Network and others on how we will deliver that. But yes, it is intended to cover that aspect of the supply chain in the near future as well.
Cool.
Should we do 2 more?
Yeah. Okay. How strong is your data in the UK specifically?
Our data for the UK is extremely good. So we're seeing within the test activities that we're doing very high rates of matching for counterparties against the trade directory. We have good data generally. We have not just depth of data here in the UK, but good breadth of data across the globe. And we have not stopped here. We are investing further in new and additional data sources to enhance the level of data population across the globe and also the country coverage. And we'll continue to do that over the foreseeable future as well.
And this one for you, Rud, how can I compare my level of friction with the benchmarks suggested as earlier?
So there's basically two ways of doing that. One way is to, it's actually an interesting question. One way is to ask for the friction index report that we just announced, and so you can look at some of the benchmarks that are in that report and compare your own organization, the KPIs you have against the report. And of course, we'd be delighted to help you with that assessment. We have consulting services to do so. So if you need help with that undertaking, we will absolutely be delighted to help you with it.
One more, I know we said two, but this one's just come in, and I think it's, hope we covered it, but just to clarify, how do you match companies from my list in your directory?
So Mastercard Track has an advanced algorithm for matching input information to our trade directory. I think we mentioned earlier, we're partnering with Microsoft, our development partner on this product. So we use advanced AI and machine learning technology and some of Microsoft's cool assets such as Bing to help us match that criteria. So there is some minimum input criteria that's required on your supplier or your counterparty list. But if you'd like to see how it works, please contact us and we would love to run a test with you.
Yeah, that's great. So I think that concludes today's webinar, unless anyone wants to rush in with another question, or if anything you want to cover, anything else. If not, then I'd really love to thank you for your time today, for listening. And as I said earlier, we'll follow up with what you've requested in terms of either if it's a demo or product information, etc. And we thank you for your time today.
Thanks, Verity.
Thank you.
Thank you, Emma and Rud.